Imagine walking on a balance beam that is a few inches off the ground. It's about 4 inches wide, which is frankly plenty wide for the average foot. Would you traipse down that beam with confidence and swagger? After all, if you fall off the ground, or if you fall off, the ground is right there. Now imagine the balance beam is 30 feet off the ground. Would you walk it with the same swagger? Probably not. The consequences of a misstep are now much, much greater. You could say this is an apt metaphor for making land investing decisions right now. With the economy moving into recession and inflation rising, deals that seemed like they were just a couple inches off the floor may now seem like they're 30 feet off the floor. The reality, though, is the deal, like the balance beam, is the same. The key difference is the macro environment and your confidence. So, how do you maintain confidence to do deals when the macro environment is changing? That is exactly what we'll answer today on the Land.MBA podcast.
All right. How is everybody today? I am your host, David Van Steenkiss, here with my co-host, Mr. Howard, the one and only Zonder.
Wow, I feel so special.
I know. Yeah, it doesn't last long. Don't let it go to your head.
Nothing does. Nothing does.
All right. What are you talking about today, man? Besides your cough.
In between my nasty cough and my stuffy nose, we are going to talk about how do you find the confidence to do deals when the world around you is changing? What do you think about that, Dave?
Well, it's a great question. We talked about it in great length, and I think when times become uncertain, we can have a tendency to get emotional. And I know myself, I watch a lot of YouTube, I read a lot, try to figure out, what people are saying about the economy and the market. And there's a few people that I plug into that I like to pay attention to. And, some of them are doom and gloom and some of them are optimistic, and you have to just keep doing your business. But I think you have to do what it takes to take emotion out of the equation as much as possible. You have to know your criteria, number one, and then stick to that criteria. Now, your criteria may have adjusted somewhat given the conditions. Once you adjust that criteria, though, you stick with it and try not to let emotions come in. And some of that criteria may or may, I just threw kind of the first top 5 on my list, and it's price, and I put price and ROI because it's your buying price in relationship to what you think you can sell it for, and how long it might take to sell it. So in an uncertain market, I know there is a county that I work in quite a bit, and I've been following the data. I've been talking to my realtor up there, and it has slowed down, both houses and land. But the nice properties, the good properties, they're still selling. So we're staying away from the marginal properties. But if, for example, you're offering ranged offers, well, you may want to try to stick to the lower end. Don't chase deals. It also depends on the type of the property and the demand in that area for that type. Is it recreational? Is it infill or cabin? So understanding the exit strategy and who your buyer is, the location, for example, staying in, again, high demand areas, and knowing who that buyer is, who's going to exit you out of that property. But if you're, real estate period is location, right? So if you get good location that is high demand, those properties are going to sell in a good market or a bad market, but you might have that price criteria adjustment. And of course, the attributes of the property. How attractive is it? Supply and demand. Do you have a really attractive property with, trees and views and great access and all the other things, power and things, is going to be less in supply than the bazillion desert squares out there. So an area I would, you know, not have in my criteria just anything that meets my price point. I would stick to areas with properties with certain attributes, and maybe not be playing in desert squares. Um,
So, in other words, uh, if you look at all the potential property types, locations, everything out there, each one represents, uh, I don't want to say a different risk level, but let's just say that a different market reality, right?
that's a good way to
Property,
put it.
because for what we're interested in, really, it comes down to how fast and easy is it going to be to sell. I mean, as we go
Mhm.
into recession, as inflation increases, uh, that's going to be really good for land on the buy side, because what are we're always going after the distressed properties. Well, as sad as it may be for many people, and I certainly have compassion for them, there are going to be more people in distress, and so um, finding those opportunities, I think, will only be a little bit easier now than it has been in the past.
Right.
So let's keep our heads straight. We're working a business, and eh, we are helping those people out, whether it seems a little sad or not. We are absolutely putting money in their pocket, and that's at a time when they need it, which is what we do.
Right.
Okay, so we
Right.
know we can get properties. The challenge is, can we move the properties? Can we sell them? And so in any market, good or bad, there's always specific locations or situations where the market's still good, even when the overall arching market isn't as good. And so I think a big challenge for us is to be able to figure out where those situations are and buy into that.
Yeah.
And I think that's kind of what you're getting up to is, those five criteria. How can I find the properties that will move quickly?
Yeah. Exactly. And I think, you know, properties that are a little bit closer in, that have a higher probability of somebody, that would be something somebody wanted to build on some days, whether it's a, small half acre, quarter acre cabin lot, or if it's a 5, 10, 20 acre ranchette, that is within a reasonable distance to the city, to a city. Um, because there's some key factors. We were talking about it earlier, how when you have the normal real estate cycle as it applies to commercial real estate and also residential somewhat, um, where you go from recession to recovery to expansion to hyper supply and then back into recession as you follow the curve. Now we're heading into a recession still with a shortage of supply, at least in the residential market, in houses. And I mean, there is definitely enough housing when you include rental properties, apartments, and everything to house everybody. But there's a shortage of houses. Construction's been on fire to catch up and other things. Now we're going to have a lot of inventory hitting the market, um, with new builds and with foreclosure moratoriums being lifted in certain markets, investors selling where their costs have increased, their property taxes have increased, and maybe they didn't buy too long ago, so their cost basis is still pretty high. So um, their cash flow is not that great. So you're going to have some of those investors selling their houses. But I still don't think the inventory is going to be at levels like, if one of the things that people are comparing is against 2008. in 2008, we had sick levels of inventory. As a result of 2008, ever since then, we've really been underbuilding. So I think if you have people that have the money to park, if you have desirable land in an area that they might want to build on, that's going to be your best bet. That's going to be a really good bet. You still, though, need to not chase the price for those people who haven't come into reality yet that it's not a seller's market anymore. It's become a buyer's market. So for those sellers, you have a more of a job ahead of you, especially in those higher quality properties, because they're more attuned to the values. You have a little bit harder job at that kitchen table discussion, or really it's the phone discussion here, to get them to sign on at a lower price, because you need to buy yourself a little bit of safety with buying better. So you always make your money on the buy.
Absolutely right. Um, but if you do the analysis, the strategic analysis, and you figure out where those pockets of opportunity are, where the market's still moving, I think that should maintain a level of confidence because you're
Yeah,
buying smart for a market that's moving. And I guess I put into that intro this metaphor of the balance beam. We can just traipse along that balance beam like it's no big deal when it's 2 inches off the ground because we're not really going to get hurt. But when that balance beam is 30 feet off the ground, all of a sudden, we're wobbling and we're careful, we're concerned, and all of a sudden our natural balance it seems to elude us, and we get scared.
yeah,
And the question is, how can we imagine that when we're doing deals, we're not 30 feet off the ground, we're still 2 inches off the ground. And that comes from doing the strategic analysis up front to find those right areas and opportunities to feel, that you can really move the property if you buy it.
yep. I exactly right. I totally agree. Um, so
Now,
I
in
think
an
that,
interesting point, I'm sorry, you mentioned something, and I just want to bring it back because I think it was really important. When we think about price, right? We think about how much am I going to pay for it? How much can I sell it for? What's my anticipated ROI? And uh, I use Price Boss to do that to get the comps so that I can pull in 500, 800, whatever number of comps I need. And then I can quickly and easily figure out what's the market price for that property. Well, that data that I'm using, those comps, could be 3 months, 6 months, in very rare cases, longer than that.
yeah,
And yet, the market right now is moving very, very quickly. And so if the market is either steady or on the rise, we feel pretty good that data, even the fact that it goes 6 months back, is going to be, if anything, underestimating the opportunity rather than overestimating it. Now, with the market you know in movement, that it's moving the way it is, we may not have that same level of confidence. And so what you did is you have a realtor that you trust
yeah,
who was able to tell you, okay, this is my real-time analysis of the trend. So not a static point, but the trend. Things are slowing down, and these kinds of properties I think are going to be more problematic, and these kinds of properties are still moving pretty quickly. And that kind of intelligence on the ground, I think, is absolutely priceless in a situation like this.
yeah. Um, and uh, I'm still trying to figure out a correlation. I haven't seen any place to get the data to correlate, houses to land, but you've got to figure it's correlating somewhat. Especially, there's nuances though, right? Where people are just paying cash for land at certain price points. Um, but I think some of those buyers are going to be taking a step back on the market a little bit as well. Now I'm just speculating, but you know, if your stock portfolio is getting crushed, you've lost a ton of money in crypto. and now interest rates are high, everything's costing you more. You may be that buyer who just says, I don't need that piece of land right now. I don't think the prices are going to go up this in the next year or two, maybe two, because I think this recession is going to be short lived. But it, with everything going on, I may hold off from buying that piece of land.
If there's one thing I've learned in my business career, it's that I don't have all the answers. Look, I'm an ambitious guy, and I like to make progress fast. The secret to achieving success fast is to harness the brain power of other people in the community. That's what the Land.MBA Smart Bar is all about. As veteran investor Jesse Marchand said, the Smart Bar gave me the motivation and knowledge I needed to push through the tough times and accelerate my path to success. Seven-figure investor Mitch Milam likes to say, there's one meeting each week that I never miss. It's the Land.MBA Smart Bar. It's like happy hour with my land investing buddies. I always learn something. So if you want to network with like-minded people, make new friends, learn heaps, get questions answered, answer questions for others, learn new strategies, get accountability, and overall get inspired while having a great time, check out the Land.MBA Smart Bar. For a short time, podcast listeners can get 20% off the annual plan, which comes to an insane $86 per month. Compare this to other programs which charge $250 a month or more. This is hands down the best deal you're going to find and the best way to invest in your success. So don't wait. Please go to land.mba/mastermind. That's land.mba/mastermind and use promo code podcast22 to join today.
Mhm.
So what's, what we go down a million rabbit trails, it's going to squeeze newbies and people that aren't really doing well out of the market and create more opportunity for those who are really working hard, for sure. Another question that I get are, should you sell on terms in this market? And I think absolutely yes, because that's going to help move certain properties. But you've got to make sure that you're getting decent down payments. The properties that are not that are 99 down and 99 a month, those could see high default rates, those desert squares. But properties where people are putting at least a couple $1,000 down and have a decent, $250, $300, $400 monthly payment, they've got some skin in that game. And in the higher end properties, where maybe you've got $5,000, $10,000, $15,000 down on some of these properties, you've got enough skin in the game to where people are going to work very, very hard to not lose that property and lose what they've got invested thus far. Now, certainly at the end of the day, it comes down to that person's choices, right? Can they make the payment, but it's painful? Or did they lose their job and can't even make their mortgage payment? And, then they're not going to make their land payment, Now, there are also some things you can do to work with if you do have defaults. There's some things you can do to work with your buyers. Now, I think at the end of the day, sometimes we can be a little short-sighted when we default on a property, when we take a property back on default, without having a good conversation with that buyer. I've modified loans before where the people got 90 days behind and I'm ready to take back the property, and I'll call them up and say, hey, are you able to just start making your monthly payment again? If you can do that, I don't need you to pay the arrears to cure the note. Just make one payment and I'll throw the arrears on the back of the loan. And even if you had somebody that was, in real bad shape, you could offer them the arrears and even offer them, hey, look, can you make half of a payment? I don't want to see you lose the property and lose the money you've put in it so far. And for me, I'm thinking, well, half the monthly payment, let's say for 6-7 months until they get reemployed, you want to put some sort of a time frame on it. But let's say you give them 6 months and then they get reemployed and they start making the regular payments again, and you throw everything else back on the back of the loan. Well, everybody wins, because you could default on that. You could take that property back and then you've got to market it and sell it again. Yes, great. We know that that is lucrative because you get another down payment, etc. But in a questionable, in an uneasy market, you know, maybe it's gonna take you quite a while to sell that property. And in the meantime, it might take you the same 6 months to sell that property, and you're getting zero cash flow. Meanwhile, your existing client could pay you half the payment and then get whole in 6 months. I like option one better.
Absolutely. Avoiding. I mean, we know that typically people think default's a pretty good thing in the business. I mean, we can resell it and reset the clock if that happens. But I think most people I talk to in the business, all the people we talk to in the Smart Bar, they just want to do right by their customers, and I think they want to do everything I hear from people in this industry is just like you. It's like, look at you've invested this much money so far. I don't want to see you lose it. I mean, I had that happen to me last year, and this was a guy who probably paid 4 years on his note, never missed a payment. He was great. I'm
Mhm.
like, let's work something out. I don't want you to lose this property. And he said, all right, well, you know, come up with some ideas and let's talk about it. So I started working ideas, and then he called me back. It was in the middle of COVID, and he said, no, I'm not going to be able to do it. I just want out. And I'm like,
Wow.
it hurt me. It hurt me to do it, because he had made that investment. But
Right.
I mean, it was a 10-year note, so I couldn't just walk away from the next 6 years of payments. And it worked out really well for me. I sold it very quickly, but may not be able to sell it as quickly now. So I mean, better to just keep people in there and making the payments. Totally agree
Yeah,
with that.
exactly. So I think we're coming up to the end of the time. I just want to add one more thing for people. People, if you a couple of metrics you can get from uh the MLS if you have access, or call up a local realtor in the area, is find out about both on housing and land, um, and ask them what the trends are for price drops, and days on market. And the thing is, we're very new into this thing. We've only got a couple of months worth of data. And if you look at May data, that is really where the trend, you started to see big stuff, at least in housing, on price drops and more inventory, increased inventory, price drops, and lower sales numbers. That trend has continued to June. So we really only have these 2 months of data, May and June. Now, a lot of people call May an anomaly because May is typically a slower month. Inventory spikes. There's graduations and all kinds of stuff, and people are getting ready for summer, and there's a lot of the normal reasons. Now, just based on everything else going on, I saw the May numbers and I said, okay, well, yeah, it's probably exacerbated a little bit by the normal trend for May, but I'm betting dollars to donuts that trend is going to keep continuing. So far in June, it has, and I expect the trend to continue in housing, where we're going to have more inventory, we're going to have price cuts, and things like that. So, how that trickles down to land, um, look, I don't think we're going to have a big crash in housing because of the demand and everything. Everything's going to slow. You've got interest rates and inflation and fuel prices that are affecting affordability and the feeling of wealth that people have. So they're a little bit more cautious about buying things that are not essential items, like a place to live.
Yeah, right. That's not essential.
Anyway,
Yeah.
but it's, there's no death to the market here. We're gonna keep going. I'm still buying. I'm just being a little more selective about what I'm buying, and I'm trying to negotiate a little bit better price, um, and throwing some of the statistics at people, because I mean, I still talk to people every day who they go, "Are you kidding me? This market's on fire." Um, they're not looking at leading indicators and the actual data.
or it's location based. I mean, there are
True.
probably markets that are still, I mean,
There are.
where I am
There are.
in Connecticut, it's still going great, but I mean, there are local places where things are driving it. So there's still an exodus out of big cities right now because of crime and
Yeah.
fallout from the COVID lockdowns and things like that.
Yes.
And people are moving out to the suburbs. So
Absolutely.
as a result of that, Fairfield County in Westchester County, New York, we're still doing great. Um,
Yes. And believe it or not, it's interesting when you look at the inventory numbers because 6 months ago it was the opposite. But now, where's the lowest inventory? The Northeast. And Connecticut is the lowest by far. Um, so I think, you're good in Connecticut. And yeah, parts of New York
Good time for
actually.
me to sell.
No, it's not. You got that long-term low interest rate. That's free money. I would never
Ah,
sell your house ever.
I know. I know. I got that interest rate. It's like 2.1% fixed for 30 years. And
Free money.
I'm like, I think I just locked myself into a house, whether I wanted to or not.
Hey, you could still move and rent if you wanted to live somewhere else,
Absolutely.
and rent the house
Absolutely
out.
right.
You know,
That's probably
there's,
what I would do. There's
you know,
no way you can walk away from that.
a very high number of, not to go down a rabbit trail, but a very high number of successful people, especially real estate investors, don't own the house they live in.
Yeah.
They own lots of real estate, but not what they live in. That's me
Hey,
currently.
you were talking about days on market, and I just want to point out if for people who don't have access to the MLS, you can achieve some of that through Price Boss, just on the Zillow tab. So if you just pull in a lot of Zillow comps, you have to use the for sale comps, not the sold comps, but you can
There's an
get
easier way to there is an easier way to do it though. You can go into the back end of Zillow and pull the data, but it only does houses. So yeah, you're right. If you want to do it for land, actually,
you want to
I
do
never
it.
thought about that.
Yeah, you
Price
want to
Boss will
do
do
it.
that.
You want to do it for the exact properties of the strategy and market you're working in. And so to
Yeah.
pull those exact comps, you can pull them right out of Zillow, plop them into Price Boss, and it'll give you lowest days on Zillow, highest days on Zillow, average and median. Now the problem is that it's still a snapshot. So you could try it a couple different ways. You could do like 3 months of data and then do 6 months of data and see, and you can come up with some kind of trending. It's not necessarily giving you a trend, but it is giving you the snapshot of how fast or slow things are moving relative to, say, other markets. I
Howard,
don't think that's
I think you just defined a new feature that you need to add. Trending.
so trending. Yeah, that would be nice. That would require a lot of data. Yeah, a lot of back data. Um, you would need to know the day of the listing too, I suppose. Well, I suppose you could calculate it at days on Zillow is going to be today minus the days on Zillow. But
Well, you could do it simply and just, yeah, I will talk about it offline. We're boring our audience. So with
but the
that,
bottom line is that's one way to do it. Asking a realtor is a really good way to do it because they should have their pulse on the market. But in a situation like we recently were talking about fear, just fear on the Smart Bar. Gosh, it was basically last podcast we put it up there, and one of the biggest fears is fear of uncertainty. And that's kind of where we are right now is there's a lot of uncertainty as to where the market is and where it's going to go. And that can actually freeze people. It could just, stop them in their tracks. So we can't let that happen to us. We have to keep the business going. We got to keep the lights on. And so we've just, all of what we're talking about is just how can we create pockets of certainty in a larger uncertain situation. And hopefully we've
yeah,
come up with a few ideas in this podcast that will be helpful for you.
exactly. And hey, it's just to parlay on what Howard said is that if you get out of the market, you're going to miss tons of opportunities. So
Yep.
you're always in. You're just going to adjust your strategy a little bit. So with that, we're out of time, and I want to thank everybody for listening. Don't forget to rate, review, and subscribe, and we'll talk to you soon.
We hope you enjoyed this episode, had a bit of fun, and walked away with some actionable insights that you can apply to your business. Dave and I have got some great content and interviews planned, so don't forget to rate, and review, and of course subscribe to this podcast on iTunes, Google Play, Stitcher, or wherever you get your podcasts. If we mention any interesting links or tools, you'll find them in the show notes. To learn more about Land.MBA, visit our website at, wait for it, Land.MBA. See you next time on the Land.MBA podcast.